Hello guys, so it's EU price action of Wednesday the 17th. So that's this candle right here. Our latest candle is 18, but I'm focusing on the 17th. So what we see here that yesterday's candle 16 has taken out this major buy side liquidity, right? So that's this buy side liquidity, a daily major buy side liquidity. Resting right there is taken. So coming into this day and price closes this storm above this high, I just want to wait. Two things can happen. Price can consolidate, price can reject lower, price can use it as support to trade higher. So I just want to wait and see how the low time frames are reacting to that candle. So I'm not sure what this is, but here this is the 16th, and then we see the 4-hour pulling back a bit. And let me mark out how you can clearly see. This is where the 17 began at this line. So this was Tuesday's price action, taking out the daily major buy side liquidity. And there you can see price started to stall and created kind of a flag pattern, which obviously is a retail concept to take price higher again, but when it takes out just a high, I think it's just a trap. So first step that I would do is obviously this one was today. This was FOMC to really take out high and really close back below. Also notice where this candle closed on the 1 hour at the daily opening, so that's nice to see. High resistance liquidity run signature over there. So basically it takes us out all this buy side liquidity and closing back in the range, which means you can prepare for more bearish price action, which happened during the day. Price traded lower, and now we hear prices here at the order block. This to me is a strong order block because it took sell side liquidity over here and it left a fair value gap. So this is an order block where you can expect a reaction of. Yeah, so let's dive in a bit deeper to the 15. So this was Asia making a move lower. Then just before London opens, price was consolidating, making another move lower. I think this might be a optimal trade entry to take to this high. Let's see. So we have this high to this low. Yes, we're trading above 50% and we're trading inside of this fair value gap and also tapping the low of this order block right here, and then price trades lower to this low and even takes out this low on the left. So let's take a look at that in a moment. Then in lunch, price is trading lower, takes out this low, takes out this low right here, but is rejecting it. It's taking the liquidity, but not giving any follow through at this moment. So whenever this happens, price trades closes back inside the range. You can look which high created this low, which was this high, and this high was indeed attacked. So this is something that I noticed that happens quite a lot, quite often. So then price consolidates, price only continues higher and higher. So it's taken out a lunch high, but it did not take out London high yet. It created equal highs. So all this whole area here is classical resistance for retailers. So there's tons of liquidity resting up above here. Same as here, of course. There's also lots of liquidity here, relatively equal highs, low resistance signature. Then after New York, price retraces into this order block, into this fair value gap, pushes higher again, optimal trade entry, and then FOMC came, which takes out all this liquidity and all the people that were short here and had buy stop orders, takes them all out. And then it closes below this low right here, creating no equal lows is taken with this wick. Yeah. So it's taking out all this liquidity. Where does it trade into? Into this order block right here. As you can see, yeah, in this order block, maybe this wick, maybe this value gap, pick one. Price trades higher again, respecting the opening price, now using as resistance, and then push price lower again, and then just the new Asia session of the new day. So were there trade opportunities? Yeah, I think so. So let's dive into this possibility right there. So price took all these relatively equal highs that were created in Asia, right? So just before London, those highs were taken. And the moment London starts, it just takes it out one more time and then really pushes lower. So we have this dealing range from this high to this low, like so. So let's go to the 1 minute. Nope, somewhere around should be here, right? It was the dealing range, not visible. And then 1 minute, what? I don't want to go back to the 15 because we know this is the dealing range high to this low right there. So this low was created. Oh wait, maybe I can split my screen. Yeah, okay, cool. This can be removed, and I want this to be visible on and below. Yeah, there it is. So this low gets created, price consolidates. You don't want to do anything in here, just let price do its thing. Then it's consolidating, and then it takes out those equal highs. Bam, takes out this high. Nice, this high is inside premium. We trade up into this bullish or bearish value gap. There's also this portion left from the value gap. Price trades into it, and if we zoom in a bit, what we can see is price traded lower heavily, closes below the downward candles. It invalidates the fair value gap, and it's creating a fair value gap from itself. So then there should be a nice short opportunity from here. Stop loss could be there, and I would target that low, and that would have been a nice 1, 2, 3. And in lunch, as you can see, price tap into it, spend a little bit time in there, and then takes off to the downside. It's respecting this order block, trades a little bit higher, takes this high out. So you could have been take a small profit if you took profits along the line. But look, price is creating equal lows, and we are in a bearish environment. So yeah, I think you just have to let it go. Maybe halfway, take a partial or whatever. But in the end, this should be a very nice win when traded like this. Was there something else? Then price started to consolidate, right? Building up liquidity, low, low, not taken, not taken. Then this low takes out those relatively equal lows, and then create equal lows with this low himself. And but we do see here a momentum kicking in, breaking highs to the upside. But I don't really, to be honest, it is also FOMC day, so price action is not that trusty. So I don't think I would take a trade in here. Still, you have this dealing range, and you have this dealing range, this dealing high. No, too choppy for me, I guess. I think you could take an entry here to target this high. But overall we were bearish, so then you again trading against the current order flow. Maybe if you go to the 1H, what do we see then? So we trade this up move to this down move, then you have this. There's this fair value gap. Yeah, there's this fair value gap. So that's interesting. So let's take a look at that, because what I would do is I would take this low to this high, right? Why? Because here we took sell side, this is just a high, and here we took buy side, this high right there. And price traded back into this fair value gap, right? So there's a 1 hour fair value gap. So that's interesting. I didn't notice that. So we create a low in London just above the 1 hour fair value gap. So that's interesting. So if you took the short and you saw this fair value gap, you could take it to this fair value gap for a nice RR, for a nice trade. Let's do this. Then price taps in a few times. Then it takes out liquidity, tapping in the fair value gap once more. And on the 15, you can see that this low just barely touches it. It's this low, I guess. And then price shoots away. So maybe what you would have done is mark out this low, right? So now London low has taken, and now you wait for a bullish price action. Let's go to the 5, maybe that's more clear. Not sure. So this low, let's make it whatever. That is thicker. So London low gets taken in lunch. You wait if something happens. Yeah, you get a reaction, but still respecting this order block. Then it goes back. It's respecting this low right here, but not breaking this high, so still within this minor range. Then we take out this high, and we also take out this low. What we did not take, when we took out these highs, that's also interesting. When we take out these highs right here, with this candle, you would expect price to take out this low, right? Because this high was created by this low. Price did come lower, but it only took out this liquidity right there. It did not take out this low. So that is a bullish signature. That's a bullish sign for the market not wanting to take out this high yet. So we're trading higher. So after seeing this in New York, you see this turtle soup move playing out, right? This high gets traded by this low. That's one get taken out, but it did not take out this low right here. So that means that price trades higher. So now price moves away at this moment. We didn't break any structure. Yeah, minor, but here this is a swing high. All right, it's a swing high. There we have a bullish candle. We do not create any fair value gaps whatsoever, but this is a change in the state of delivery, because this is now an order block, right? This order block never gets traded into, price just goes away, goes away, and this is the first order block that was fair value gap that was being printed. Also notice that the liquidity that was generated was this high and this low resistance, right? But look at what we have right now. Again, this low was not taken. Price now this place is higher. We do print an order block. We close well above it with no wick whatsoever. We create a fair value gap right there. So that could be a nice entry. And look also how this fair value gap was being respected. It was traded into. But look where the bodies are. They're way above this fair value gap. So that could be a trade, right? A long position. So you could enter base of this fair value gap. Right there. Safe low could be here, but I think maybe this low or something below, or this low below this order block, or maybe like there, or maybe gewoon fixed stop 5, maybe just below this somewhere, maybe give it some room to breathe. And then what you want to target is, if you see this also as a kind of a market maker sell model, buy model, this could be your original consolidation, right? So we go higher, and what I like to do always is target the rejection block, right? So I would target this one right there, and there you go. That could be a very nice trade and a very quick one also. So yeah, that could be a very nice trade if you had paid attention. Kind of technical, but yeah, it was possible if you put all these pieces together. And then I keep saying it is risky because this FOMC. Not sure if you want to do that. That's really nice. That would be a really nice scalp. Then price trade higher, lower, and then you just have to sit this one out and wait for the next day. So yeah, again, this would be a good short in London. There was a second entry here, but I would say there was at least one trade that you could have taken this day. So yeah, thank you for watching, and catch you guys next time.